So we have in the books of Henry Cafe, in the books of Henry Cafe, we combine the trading profit and loss account. In the books of Henry Cafe, we have the trading profit and loss account for the year ended. They've given the year here, 31st March 2003. 31st March 2003. So we have the particulars here, amount, particulars, amount. We are going to do the accounts simultaneously. That is the trading account, trading profit and loss account, and the balance sheet. We are going to do it simultaneously, okay, because it becomes easier. You may lesser chances that you may skip an item. So I prefer to do it simultaneously. Balance sheet as on 31st March 2000. Yes, so we just as we have the items, we'll try to put them. We may have to leave some space in between so that we put the correct items in the correct account. So we start with the opening stock, which goes in the trading account. To opening stock. The opening stock is 37,500. Then we have receipts from visitors. Now, if you remember, I told you when it comes to a hotel, they don't have sales. They don't sell goods because it's a service business. Okay, so they don't have sales. So these receipts from visitors are basically the major income of the hotel. Receipts from visitors are the various people who have visited the hotel and paid for the service that has been provided by the hotel. So we have receipts from visitors, which is 3,82,560. So I will show it as by receipts from visitors, 3,82,560. Then we have fuel and light. I will write fuel and light. Again, it comes in the trading account. I will leave a line because normally after opening stock we have purchases. Okay, and there are purchases in the problem. So I will leave a line to write purchases. So when you're doing it simultaneously, this is how you need to do it. You may have to leave lines in between so that you kind of have the correct format. So the fuel and light is 10340. Then we have rent and rates. Now rent and rates goes in the profit and loss account. Okay, so I will have to leave space. There is wages here. There's carriage. Okay, some adjustments are there. You'll have your gross profit. You'll have the total and maybe rent and rates. So to rent and rates. The rent and rates are 15,530. If there are blank lines in between, if you leave extra blank lines in between, there's no problem at all. But try to maintain the format as much as possible. We normally start the trading account with the opening stock, followed by the purchases, then you have the various expenses. Okay, and the last thing is the gross profit. Then you have advertising, which is 8520. Advertising is 8520 to advertising. Then there is purchases, 1,15,000. Two purchases, 1,15,000. Then we have China linen and cutlery. Now, China linen and cutlery, I told you, is a current asset. So that's going to go in the balance sheet. If you remember. China linen and cutlery. China is all your crockery, your plates, your bowls, okay, all the serving dishes, all that comes in China. Linen is all your bedding, soft furnishings, your bedding, cushioning, all that, and cutlery, forks, spoons, knives, all this comes in cutlery. So basically, these are, for example, if you talk about China, okay, plates, cups, bowls, dishes, you don't buy them and throw, you don't use them on a daily, or you don't buy them on a daily basis. If you buy them, you normally use them for a longer period of time. Not maybe as long as a fixed set, but uh, it's more suitable to come under the head of current asset. Okay. So China linen and cutlery will be 15,370. So that's going to go in the balance sheet. I will leave a few lines because there are some fixed sets here. I think what are the fixed sets that are there? You have furniture and leasehold premises. Okay, so I will just leave few lines for that, and then I will write China linen and cutlery. Now I need to write this in the inner column because there is depreciation on this. So China linen and cutlery, the amount is 15,370. Then we have wages and salaries, 1,05,000. This comes again in the trading account. There is an adjustment to this, so I will have to write it in the inner column. Wages and salaries is, there is an adjustment here, so I will write it in the inner column. 1,05,000. Then there is carriage, 2,700. I explained carriage last time. Okay, carriage can be carriage inward, carriage outward. Both are expenses. Okay, but carriage inward comes in the trading account. Carriage outward comes in the profit and loss account because carriage inward is the transportation expenses on bringing in the raw materials, whereas carriage outward is the transportation expenses on distribution of raw materials. So when they just mention it as carriage, we assume it to be carriage inward. Okay. So carriage inward, or we just put it as carriage. Leave a line for that adjustment of wages. To carriage, the amount is 2,700. And then we have furniture and fittings, 85,000. This is a fixed set. Just write this here. Liabilities. Furniture and fittings. The amount is 85,000. Why I'm writing it in the inner column is because there's depreciation on it. Then we have bad debts. Bad debts come 2,500 in the profit and loss account. This also will be in the inner column because there are adjustments to this. There are adjustments, I think at least two adjustments are there. Then we have drawings, 17,250. Before writing drawings, I would prefer to write capital because drawings is shown as a negative figure from capital. So capital is 2,77,400. Again in the inner column. 2,77,400. To this, we will have to adjust the drawings as well as the net profit or loss accordingly what we get. So the drawings are 17,250. Less drawings 17,250. Then we have, I've still not finished with capital because we have to adjust the net profit, net loss accordingly. Then there is visitors ledger balances. These are your debtors. I explained visitors ledger balances are basically the balances from the visitors ledger. Now visitors are the guests of the hotel. Okay, and there are at times they may not clear the bill the moment they leave the hotel, so they become debtors. They may be given a credit period, a certain period by which they have to clear the bit. So that comes under visitors ledger balances. Normally we don't call them debtors. We say visitors ledger balances in case of hotels. So that's 12,150 visitors ledger balances. This is again, I'm going to write this in a column because there is an adjustment to it. So I'm going to write that in the inner column. Then we have creditors 17,500. Creditors. I've left a line for either net profit or loss. 17,500. Again, this I'm going to write in the inner column. If you remember, there is a adjustment of discount received. Okay, so that outstanding discount received or receivable, provision for discount received. Then we have 10% loan. Now, last time I had explained this. When we talk about loan, a loan can be an asset as well as a liability. When is a loan a liability? When the loan is taken. For example, if this hotel had taken the loan would have been a liability. But if you see here, the loan is shown as a debit balance. That means the hotel has given a loan. Okay, the hotel has given a loan, so that time it becomes an asset. So if you have given the loan, basically you will receive the principal as well as earn interest on that loan. So this 10% loan is going to come in the balance sheet on the asset side. Loan can be a liability as well as asset, depends on the balance. If it was a credit balance, I would have taken it as a liability. Okay? So this 10% loan becomes an asset here. I think, there's just one adjustment here, so just show it as 10% loan. Again, I think there is an adjustment to this 10% loan. There is some outstanding interest. So I will write it in the inner column. 10% loan is 1 lakh. Then we have leasehold premises which are 1 lakh 15,000. 1 lakh 15,000. Again, I've written it in the inner column because there's depreciation on it. And then we have cash at bank, which is 33,250. Again, I have to leave a line here because there's an adjustment. Cash at bank, 33,250. And provision for bad debts, this is the old RDD, 1,400. I already explained the format last time. I've also mentioned the format here. Okay, so old RDD, which is given in the trial balance, just comes once. So that's the old RDD. The RDD given or the provision given in the trial balance is the old RDD, which needs to be minus. So less old RDD. I will leave a line because there's another adjustment there. Less RDD, which is the whole RDD is 1,400, and the last thing that we have is repairs to furniture 3,750. To repairs to furniture 3,750. Okay, now we move on to the adjustments. Anyone has any questions still here? Anyone has any questions with regard to this? Anyone has any questions? Okay. So let's move on. Now we go to the adjustments. Stock on 31st March 2003, adjustments will always have two effects, is 11,450. So this becomes the closing stock. So by closing stock, it is 11,450. Again, closing stock comes in the balance sheet as well. 11,450. Next we have provide for depreciation on furniture and fittings at 10%. So we need to calculate this accordingly. So depreciation here is 10%. So less depreciation. 10% of 85,000 will be 8,500. So if we minus this, it's going to come to 85,000 minus 8,500 will come to 76,500. And accordingly, we also need to show this depreciation in the P&L account. So to depreciation, on furniture, it is 8,500. Furniture, it's 8,500. You can either write these directly in the outer column or you can write them in the inner column and total them outside. I think I'll write them in the outer column directly. So this comes to 8,500. Then we have on leasehold premises, they've directly given you the depreciation, which is 5,000. They've not given you a rate, so less depreciation, 5,000. Which comes to 1,10,000. So show that accordingly here. Leasehold premises, it is 5,000. And on cutlery also they've given a depreciation. China linen and cutlery is 2,370. 2,370. So that comes to 15,000 minus 2,370 will be 13,000. China linen and cutlery, it is 2,370. 2,370. So we have shown all the depreciation. Going to the next adjustment. Increase provision for bad debts to rupees 1,500. If you see, we already have provision for bad debts. This, like I said, is the old RDD. This is the new RDD. Okay, so we'll do this first before we go on to the next. So the format is bad debts, add new bad debts, add new RDD, less old RDD. So I'm going to add new RDD, which is the amount is 1,500. So the total of this comes to 2,600. The total of this comes to 2,600. Okay. Similarly, this one will have another effect in the balance sheet. This RDD will have to be minus from the debtors. In the balance sheet, like I said, this is the amount that you're supposed to receive from your visitors or your debtors. Okay, but if you're making a provision, you're making a provision that there are some guests may not pay, some visitors may not pay. So basically, this amount has to come down. So that's why we minus the new RDD. Why are we adding it here? Because if you create a provision, you're basically increasing your expenses. So that's why your bad debts is an expense plus another provision that certain debts may also turn bad. Again, it becomes an expense. Why you're minusing? Because the old provision is not required. So you created a new provision. So we need to minus it from your visitors ledger here. Less new RDD, which is 1,500. That comes to 12,150 minus 1,500 comes to 10,650. Okay. Then to that we also have a continuation. Discount received of rupees 1,500 is not accounted for. Now discount received is also is an income, so it's going to come on the credit side. Okay, it's out discount receivable actually because it's still not accounted for. So by sorry, we start up profit and loss account here. Okay, I'm leaving one line in case there's a gross profit. So by discount received 1,500. And again, discount, from who are you receiving the discount? Basically from your creditors. So if they are giving you, who are creditors? Creditors are people who we owe money to. So if they are giving you a discount, basically the money that you owe them will become less. Your liability will decrease. So I've said less discount received 1,500. And this comes to 16,000. Interest on loan is outstanding. That is, we have to calculate the interest on loan. Now, since this loan is an asset, we are going to earn the interest. Okay, so the interest here is not going to be an expense. The interest here is going to be an income because the loan is given. It is not taken. The hotel is given a loan, so the hotel is going to earn the interest. So by interest on loan, outstanding interest, it's going to be 10% of 1 lakh. 10% of 1 lakh, which is going to be 10,000. 10% into 1 lakh, which is going to be 10,000. Okay. Similarly, we have to add that interest to the loan. You're supposed to receive an amount of 1 lakh because you've given a loan. Along with that, also you're going to receive the outstanding interest. Outstanding interest, which is 10,000. So the total amount that is receivable on account of the loan is 1 lakh 10,000. And then the last adjustment, wages and salaries of rupees 5,000 are paid in advance. So this becomes prepaid. That means out of this 1 lakh 5,000, 5,000 is of prepaid in advances. It's paid for next year. That's why we minus the prepaid. Because if we don't minus the prepaid, we are showing next year's expenditure in this year's, which will show a higher expenditure than what is actually the expenditure of this year. So less prepaid, prepaid wages, which is 5,000. So that becomes 1 lakh. So the actual expenses on wages and salaries is 1 lakh. Okay. And the second adjustment, since you paid it in advance, it's an asset for you. So that comes on the asset side. Prepaid wages and salaries 5,000. Okay. So that's we've done the problem. We just have to now balance it. So we'll first calculate whether check whether there's a gross profit or loss. So the total this side comes to 3 lakh 82 560 plus 11,450 comes to 39 394,010 394,010, which is the total this side. I think the credit is higher than the debit. So we will have a gross profit to gross profit, which is going to be minus all the debit items. One 128,470. 128,470. So this is the balancing figure. Bring down the gross profit. We will have by gross profit brought down. It's a two gross profit here carried down. So by gross profit brought down is 128,470. So we need to total this 128,470 plus 11,500. This total comes to 139,970. 139,970 minus, let's minus all the expenses. 15,530 minus 8,520 minus 26 minus 3,750 minus 13,500 minus 2,370 comes to 93,700. So there's a net profit of 93,700. To net profit 93,700. This net profit has to be added to the capital since it's a sole proprietorship. He enjoys the entire profit. Add net profit. If it was a partnership, we would have had to divide the profit, which we are going to see when we do the problems on partnership. 93,700. So the total here comes to 93,700 minus 17,250 plus 2,77,400. 353,850. 353,850. And the total of the balance sheet is, let's see if it's tallying. This is 369,850. Check whether this is also tallying. Yeah. The balance sheet is tallying and the total is 369,850. Any questions, students?